Hello and welcome to this training video on how to pay your home loan off faster and save a small fortune. Shortly, I'm going to set the scene for the rest of the video, but before I do that, I'm just going to reiterate a few important points here. Number one, anyone can do this and you don't need to fork out mega bucks or get someone to implement it for you. Number two, watch out for the spruikers. If you've seen this on Facebook or anywhere like that, you've probably got spruikers out there saying you can pay your home loan off in 5 years. Watch out, they're probably just trying to sell you a bad investment property. Number three, none of this is financial advice. I'm qualified as a mortgage broker to give you credit advice, and that's what I'm going to talk about today. Well, I run and own Will Bell Mortgage Broker based in Melbourne here, and I've been doing that for about 15 years. We help people with finance, and more importantly, we help people with debt, not just getting into debt, but getting out of debt, which is what today's video is about. Now, enough about me. Let's talk about the strategy. Again, don't switch off. I'm going to tell you this, and straight away, we're going to go into a case study where I'll show you how it works on some calculators. So this strategy is, as I said, it's incredibly simple. Number one, refinance to the cheapest rate on the market. Number two, increase your weekly payments by $100 a week. And most people can do that. It's very simple. $100 might sound like a lot to some people, but look at your Uber Eats bill or your coffee bill or something like that. Everything costs a lot these days. So if you can't afford an extra $100 a week, you probably should be looking at your budget. All right, guys, here's the case study. I'm just going to break it down nice and simple for you. So the loan amount's $400,000. The current interest rate, this is current as of September 2022, with the recent rate increase, is 4.79. That might sound a little bit high, but what I would say to you is check your interest rate because they're going up very quick. And a 27-year loan term. So quite often we get it when people want to refinance their loan. They're actually on a higher loan at the start, and then after a few years, their loan can drop significantly, their interest rate can drop significantly. Now, there's a few reasons for that, which I won't go into. You'll just have to trust me here. So, based on all of this, the weekly repayment is $507.89. So, under this scenario here, all we do is refinance to the cheapest rate and add another $100 on per week. So, the cheapest rate at the moment is about 4.29. I could probably get a little bit cheaper if I nosed around, but let's just say 4.9. That makes it 0.5% cheaper, which is a nice round number for this example. You can see the weekly payment is $507.89. So all you need to do is pay an extra $100 onto that. So your weekly repayment will turn into $607.89. So let's go into the extra repayment calculator. Here we are on the extra repayment calculator now. So this calculator, I'm going to work in the scenario where we're on the cheapest rate and we've paid the extra $100. So cheapest rate at the moment is about 4.29. I could weasel around and find something cheaper, but let's just say 4.29 for the sake of this argument. Same loan term, so we can actually figure out how much you're getting ahead and how much you're saving. Weekly repayments, and I just want to point you to here, under the current repayment, we're putting the current repayment to $608. It's supposed to be 89 cents, but the thing won't let me go to the decimal point. So you might look at this and go, well, the extra amount's 127. What's going on with that, Will? But you got to remember it's 127 because the cheaper interest rate is dropping the minimum repayment by obviously $27 a week there. So that's what that is. And if you scroll down here, basically it's saying you've saved 98 grand, call it $99,000 worth of interest, and you've paid your home loan off in, what is that, 19 years. 19 or 20 years. So you've paid it off 8 years and 39 weeks quicker. So I think most people would agree that's a huge savings. One thing I want to get you to do, one activity I would like to get you to do is look at this in another way. And the reason why I get you to do this is you got to step back and you think, why am I doing this? And it's not just to save 98 grand, it's to be debt free it's to be debt free earlier, but also you've got goals beyond that. So most people have goals of just retiring with enough money to live off. So let's look at it this way. Let's look at it. You've been paying $608 a week for the last 20 years. You can pay another $608 a week, and that's going to continue towards your savings. So let's have a look here and bring up a calculator of 608 times 608 times 52 weeks times, what was it, 8 years and 39 weeks. So let's just call it 9 years. It's a bit under that, but there you go. So if you pay that extra $607 every week after you've paid the loan off till the loan term's supposed to end, you've saved up another 284 grand. Now, you might be putting that money into super or somewhere else. If you're putting it into investments, it's probably going to compound and it's going to be increased over that. So I just wanted to show you that because it just shows you the difference between people who would do normally what they're doing now, which is not that much, and people where you just do a little bit extra, pay an extra $100 a week, and you get such a massive result. So you can kind of do a compare the pair on yourself if you kind of use your imagination and look 30 years into the future. I hope you enjoyed that case study. Like I said, it is pretty simple. I have this experience when I show this to my clients myself, and generally it's an eye-opening experience. So I hope you really got something out of it. If you need help implementing this, I run a mortgage brokerage. What we do is we help people find the right home loan for them. We don't charge a fee for it. If you need help with that, please get in touch. Our links are below. Cheers.